Hey, TGO traders and investors, Matt Buckley, call sign Whiz, the primary and weekly options model portfolio manager here at TGO. Reminder, this afternoon at 4:30 after the close, we're going to be having a briefing with Todd Butterfield, the Chief Investment Officer of the Black Bay Group, and we're going to be talking about his blended strategy, his registered investment advisory service, who's our strategic partner with the Top Gun. So make sure you check your email and register for that event. Wow, really seeing a sell-off today in the markets. Why? Rumbles across the Pacific. We're seeing some really bad manufacturing data out of China, some manufacturing, and just the economic data, macroeconomic data coming out of China aren't that solid. Okay, from manufacturing to credit to just overall general feeling and their GDP, obviously, as we saw recently. Now, over here in the United States, weekly unemployment claims kind of a yawner today, but our manufacturing, flash manufacturing PMI, big miss. Okay, some mortgage indicators, HPI, a miss, and existing home sales, a big miss. And the Conference Board's leading index of economic indicators, another big miss. I mean, existing home sales, fourth month in a row that we've had a miss in home sales and the lowest since 2012. And in one of my live trading sessions recently, I talked about this. I talked about housing. You know, financials and transports tend to lead us into and out of good and bad in the market. And recently, for the past couple of years, some 500-pound heads, which I am not one of them, have said it's housing. Housing is going to lead us into and out of stuff. Well, I don't necessarily believe that, but housing is starting to turn into a drag on this market. This quote-unquote housing recovery that we thought we've seen, in my opinion, was nothing but a dead cat bounce. And with the financials rolling over last week, come on, Wiz, financials had good earnings. I saw JP Morgan, Goldman Sachs, Bank of America. They were bad. When you dig into it, they just weren't that good. And with the Baltic Dry Index and FedEx missing, so financials and transports starting to show some signs of wear, and housing starting to show signs of wear. You're going to see, as we exit bizarro market, triple-digit down days like this. Dow's down 180 as I'm shooting this. The SPOOs are down 19. Take a look at this model portfolio, though. Two blindingly green trades right here in 2 days. What's that? Tuesday, Wednesday. Today's Thursday. 2.5 days. We're looking at $3,000 in profit on $10,000 in risk. 30% return in 2.5 days on 2 trades. Got an Apple Iron Condor and a Google Iron Condor in our Top Gun Options weekly options model portfolio. Potential profits this week, we're looking at $4,000 on 10 grand in risk. Potential 40% return if these 2 Iron Condors go right down the fairway as I expect them to do by the close tomorrow. This Apple trade's already up 92% for $1,800. The Google trade's up 64% for $1,400. Really happy with our weekly options model portfolio performance. Year to date, we're looking at over $10,000, nearly $11,000 in gains in just our weekly options model portfolio in a couple weeks with limited risk. So I strongly recommend you give us a call at our 888 number on our homepage, 888-308-2112, to get into one of our live trading services here at Top Gun Options. Another one of our services, the primary live trade brief, has a couple hedges in that portfolio. One of them is on SDS, Sierra Delta Sierra, which is the ProShares Ultra Short, which means as the market goes down, that goes up. And it's up 150% in the past couple days as this market's imploded. So you've always got to have a hedge in your portfolio for days like today. If you're sailing along in the USS, Top Gun Options, and you take a couple torpedoes to the side, you don't want to sink. You want to have a couple bilge pumps that can pump some water out and keep you afloat so you can win the war, okay? So make sure you hedge, folks. I say that as my tagline, but on days like today, it's absolutely critical because a lot of my positions in many of my portfolios are longer-term trades, right? Out a year, maybe 2 years. So I can take a hit to those, right? I'm still long-term bullish on China. They might be going through some rough times right now, but I'm longer-term bullish, which means I can make money potentially on my short-term hedges. Market pulls back triple digits. I make money on SDS. Put that one in my pocket and keep on going as China eventually turns around and that trade works out for me. Okay, so happy hunting. Make sure you hedge. I'm serious about it. If you can't attend today's webinar after the close at 4:30, go to this page, topgunoptions.com/interested-in-managed-accounts. So interested managed accounts with some dashes in there, or just shoot us an email at managedaccounts@topgunoptions.com, and we'll hook you up with the information that we talked about in our webinar today. Okay, I'll talk to you guys later and see many of you after the close at 4:30. Check back tomorrow over at Wealth Creation Investing for my Friday market wrap-up to debrief the week. We'll see you.